always loaded. I had to stay down when they got what I wanted. Now when they see me, them bitches be on me. Now when I pull up, them niggas hate on me. I got more money than niggas be homies. Had the grind for the shit, did it all.
What's up, y'all? Welcome back to another episode on Living Wealthy Investments channel. Today's episode, we're going to be giving you a full market rundown, letting you see and understand what's going on in the stock market. But not only that, we're going to be looking at clips specifically focusing on building wealth within stocks. And we're actually going to see what is the overall sentiment. Okay, so what are most people currently saying about the stock market, and how do they see the stock market moving on throughout the rest of the year? Alright, let's get into our first video. It's going to be from the channel of the Technical Traders. Alright, this video was released two days ago, and it's going to be going over stocks and real estate forecast.
Stock market continues to bounce up. In mixed markets today, we're seeing the Nasdaq down, the other indexes are up a little bit, but overall, when we look at our cycle analysis and the bias of the market, we are anticipating this market to continue to push up for another week and a half or so, and then from there we'll gauge how that is going to unfold. Now overall, we have the market potentially running up into resistance, into the support low, these highs, and we could see it get up into this area, and then from there we'll just have to see how the market looks health-wise. Is it a strong rally or is it just a bounce? And kind of go from there. We have short-term cycles. You can see a bunch of them topping in about 10 days or so. We do have longer-term cycles putting in a bottom, several of them. So this market could drag out over a longer period of time and put a much longer sideways pattern, but we'll have to just, again, take it one bar at a time. We'll follow the trends and go from there. Right now we are seeing money. The stock market has been ripping higher over the past week and a half. Money has been moving out of the boring defensive sectors. Utilities fell out of bed there yesterday, really selling off, giving back pretty much all their gains over the past couple of weeks. So people moving away from defensive utilities. Consumer staples, same thing, moving down, going the opposite direction. While the stock market was falling before, we saw these defensive sectors hold their value or move higher, but now they're going the opposite direction. Nobody wants toothpaste and toilet paper. If we look at the healthcare, no matter what, we still need our healthcare. And of course, it's really been trading sideways and gave a good chunk of its gains there yesterday as well. And last but not least, boring kind of big blue chip dividend stocks continued to move down almost 1% yesterday, and they're really struggling. What's interesting is if we take a look at the dividend stocks are down about 8.2% from the highs. The SP 500 is down a little less than that. So the dividend stocks, again, definitely carry more risk, and a lot more risk than people think.
Now what he's going through is all the different sectors, and he's basically showing us that all of the sectors have been down over the past couple of months. All right, and so if you're keeping up with the stock market, you already know that and understand that the stock market has been having a negative year all 2025. So I'm writing this down so I can understand, so I can keep track of everything that everyone is saying, and then I can pull it together and come up with a full summary of what exactly is the sentiment within the market.
And they're definitely underperforming. The SP 500 recently sold off and is having a bounce, whereas we look at the dividend stocks, they broke down a long time ago, and they are putting in what looks to be a fairly bearish pattern that may end up unwinding even more. Again, I think there's a lot of downside, 40-50+% in the dividend space, which is going to kill retirement accounts. We've talked about that many times, so I won't go into detail there. Gold continues to hold its ground. It has rallied up to that 3,050 to 3,060 range, and now it is pulling back, taking a bit of a breather. The next stop is about 3,200 to the upside. So we have another potential leg to the upside. Again, it keeps hitting our targets, taking a pause, and then running up and hitting the next target. Gold continues to be favorable. Again, if you're going to play the precious metal space, I like physical gold the best. If not, then it comes down to GDX, which are the large cap gold miners. They move closest to gold. They're the most reliable. And then, of course, you get into the more volatile and craziness with the gold miner juniors and silver miners and silver juniors, which silver juniors and silver stocks are underperforming dramatically, nowhere near the highs from last year. And they're really kind of underperforming. So again, the precious metal space is good for the physical long-term investor who wants gold and low volatility. Silver and silver miners are struggling and way off the highs simply because they're a speculative play. They're not the same investors who are trading. The reason gold's moving up is because the whole world is nervous and they want to protect their capital, whereas silver and silver miners are for people who are looking to make money. And we're not really in that phase of just easy, big returns in the precious metals space, in all precious metals. That time will come, I think, late this year, early next year, when miners and silver will be kind of the play. Jumping forward to, let's take a look at real estate real quick. If we take a look at real estate, some interesting charts. So in the South, especially like Florida area, we have hit record highs since 2000, record highs from the last bubble of how many homes, single family homes are for sale. There is a flood of homes. Everyone was building, and subdivisions, all that stuff is available. And now we're above the 2006 market top in that market. And it looks like it's showing some signs of volatility with some of these recent sharp pops and drops. Which I would say feels something similar to over here. So this is not a good sign for real estate, obviously, with what's going on. And Trump talking about Canada. Well, you look south and there are millions of Canadian snowbirds that go to Florida who own homes and condos there. And a lot of them are bailing and they don't want anything to do with the United States. They're selling their homes. And now we got this influx of all these developers thinking they're going to make easy money building homes. They're dumping these new houses on the market. Nobody wants to buy. There's fewer buyers, and there's a lot of people wanting to put their homes up for sale, and now there's new homes in the market. So not a good sign for Southern real estate. Take a look at this too. This is single-family homes, all stages of constructions. This is the sales. Obviously, we have very low sales. So you go back to 2005, 2006, we had tons of sales. Lots of homes, but lots of them were selling. It was a feeding frenzy. Now we have lots of homes and things aren't selling. We just don't have any interest. This is a drop and a pause, which points to another drop, which means sales are probably going to slow potentially until prices drop. When prices drop, then we'll start to see sales pick up. But that doesn't mean home prices will go up. It just means there's a lot more sales because homes are falling in price and people are trying to pick up at a bargain.
All right, so he stated that gold could go up to 3,200. Right now it's at around 29, so it still has some more possible upside. We also have a bear flag forming on the XLK, and the XLK is the energy sector, and a bear flag means that the stock price is going to be going down soon. Okay, so that means that that you can put in some puts or an options contract to make money. All right, now let's go into our next video. And our next video is going to be from Gareth Soloway.
Welcome to the weekly market wrap up. My name is Gareth Soloway, and we had quite a day on Wall Street today. And in fact, in crypto as well, a big day here today. So we saw the stock market collapsing down about 2 to 3%, Bitcoin falling sharply as well. A lot of this on the back of PCE data. Now, the PCE data, the headline numbers came in approximately as expectations were thought. However, the core was slightly hotter. In addition, this is the kicker, none of the tariffs that have been imposed yet are reflected in these numbers. That scares the market. In addition, the uncertainty of, are these tariffs going to be put in on April 2nd or are they going to be delayed again? All of these factors contributing to uncertainty. Throw in consumer confidence, consumer spending, you name it. The markets are a mess right now. So let's go over to the big board. Follow me over here, folks, and let's take a look at what we have today. You can see the Dow Jones Industrial Average down 750 points on the day. The Nasdaq down over 500 or about 3%, and the S&P 500 down 114 points or 2%. Nasty, nasty drop. Oil down slightly on the day. Gold is rallying again, safe haven asset. People continue to move into that, and Bitcoin down about 4%, down $3,400 on the day. Now, if we flip over to the daily chart, this has been something I've gone over with you guys in the game plans, in trading the closes, all of these, right? We had the bounce here up on the S&P 500. Basically, it took about 9 days to bounce up. In 3 trading days, we've reversed almost all of those gains. That shows relative weakness. Remember that. Again, when it takes multiple days up and only a day or 2 down, it shows you how weak the markets are. Now, the first level we're watching right here is very clear, right? We have this parallel. This is something we've gone over before. This area here, this is perfectly parallel with these 2 top points. So once we get down here, maybe on Monday or Tuesday of next week, let's see how it reacts. On the SPY, this is right around 550. If this breaks, you have a couple stopping points. One would be down here, but really your August lows of 2024. That's what I'm isolating.
He's done said a lot so far, and I just want to stop it so we can make sure we keep up with everything he has said. So he has mentioned that the stock market today has went down by 2%. He also mentioned that the PCE, which is the price consumer index, the core was hotter than expected, and that all of the tariffs that the President Trump is putting in is going to start bringing uncertainty to the market. This uncertainty is ultimately going to cause stocks to continue to sell off like they have been doing all year. He also mentioned that in 3 days we have reversed all of the gains that we have got over the last week. So in the previous video, he was speaking on how we would go up to our resistance line and then possibly move to the side. And then today, because that video was 2 days ago, today the market has reversed all of that completely. So it has taken away all of the gains. And he is also mentioning that the stock market could come down to the August lows of 2024. Alright, so he has said a lot so far in these first couple of minutes. Okay, so we're just gonna keep listening and continue to understand what's going on.
Down as my next major level on the S&P 500. All right, let's walk back to the computer here and take a look at a few other charts. Okay, so first off, let's take a look at the QQQ. I think this is a beautiful chart. So let's go to my charts here. If we can, flip over to the screen here and take a look. There we go. You can see this trend line right here, right? So again, pivot low, pivot low, pivot low. We broke down, and again, look at the retrace and how many days it took. Look at all these days of chop that headed up, and in 3 days we wiped that all out. We came down, we filled a little gap, but we're now into technical support.
All right, so we're looking at this chart right here. This is exactly what the other trader was speaking of. He was saying that the stock market would go up into that resistance point. All right, so you see it came down, went all the way past that yellow line, and then it went back up, touched the yellow line, and then sold right back off. Okay, when we're trading stocks, this is something that we're looking for. We're looking for it to break the yellow line, then come back and touch the yellow line. Once it comes back and touch that yellow line, we can then put options in on this contract or this stock and make money with this stock going down.
Not big support though. All right, one of the key metrics of technical analysis is that when you have levels that are hit very soon after each other, the level is much weaker as support versus something that goes back a lot further. Like for instance, here to here, right? Again, a long distance, or these highs as resistant points, those are going to be firmer because they go back a lot longer. The Russell 2000, another bashing to that, down over 2% today. But take a look, we're coming back into this level. I have us projected out to go on the Russell. Take a look at this long-term trend line going back to March 2020, the COVID lows to this low. Eventually, I think there's a little stopping point here around 191 on the IWM, but eventually 187 is where I start nibbling on this stuff. All right, now we're going to talk about some trading opportunities here, and this is the beauty of it. So if we come back to me on the screen here, I want to just be clear on this. Markets in panic mode mean opportunity to swing traders. All right, this is the beauty of the market, right? When it's just grinding up little by little, it's great for long-term investors. For swing traders, not so good. When we get volatility and big drops and panic sets in, we can buy those dips into technical levels and make quick 10, 20% moves in just days. All right, let's take a look at this. This is one of my favorite trades into next week. So if we go back to the screen here, you can see right here is Broadcom. This is AVGO, trillion-dollar company, semiconductors. This again was trading at $250. It has come all the way in to these two trend lines converging. So again, look at the trend line right here, right up here, and this downsloping one. In addition, if we take our Fibonacci tool, and I went over this morning in the game plan, we drag our fib down, and I apologize, that's not the fib I want to show. Here we go. We go back to our lows right here, so the beginning of the bull run, to our all-time highs, and look at that fib level. The 50% fib retrace is right at that cross section right there. And so listen, does it guarantee us a bounce? Heck no. Nothing's guaranteed in this game, but does it raise the probability that AVGO could be due for a $10, $20 bounce here? Heck yeah. I would look for a move back to about 178 to 179 here, maybe even back to 187 from the current 169 close today. NVIDIA, this again is a great chart. In fact, let's go over to the big board and just take a look at this here. So if we flip over here, folks, and we look at what we have going on, this is a great example of a break of support and a retrace to the scene of the crime and what can happen when we hit that. So we have our lows here, right? So all of these lows, you can see again, hops, kind of almost kisses, comes up here, hits, bounces, and then breaks. And that break right there, look at how that break takes hold, it confirms, it retraces, and then what happens? Price is rejected. So remember, former support, so it was support here, 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 and over here, once support breaks and confirms, this now becomes resistance, and it tends to reject price to the downside. And these are just simple rules that we can all learn from that will guide us to which position to be in. So instead of thinking, oh, NVIDIA is going back to the all-time highs here, at this point, you need to see that trend line and say, wait a minute, this actually could be a sell signal to the downside, and that is what it was. And NVIDIA now has fallen pretty sharply this week alone. All right,
so he just went over two companies. Okay, the two companies he went over, one was AVGO, the other was NVIDIA. On AVGO, he mentioned that it was in major technical support. Okay, technical support is when two lines that you have drawn on your chart that matches up with the candlesticks and the price movement within the stock chart. Okay, when those lines converge, you are running into what is called major technical resistance or support. Right, so he said that AVGO is now at major support, and that it could possibly be a up move for next week. He's looking for it to go into 178 to 187, but he also looked at the chart of NVIDIA. Now, if you remember the chart of QQQ and NVIDIA chart looks extremely similar, right? They broke past our yellow line of support, and then it came back, touched the yellow line of support, and sold right back off. All right, so if you were watching either of these companies this week and you had these charts drawn up, you could have easily made 200-300% on your money.
let's walk back to the computer here and take a gander. Lululemon got hammered today. I think the big thing on Lulu that I want to touch on is that Lululemon is a high-end consumer product, right? It takes a lot of, or higher income earners are what are usually buying these products. And when you see a drop like this on Lulu, right? This is telling us the high-end consumer is now struggling. And so again, it starts out with the low end. Those are the ones that feel the kind of the lower to middle income. They feel the pressure of a poorer economy first. And then once it trickles up to the high end, which by the way coincides with the stock market not making new weekly all-time highs, it's again the reverse wealth effect. Now you start seeing the higher end consumer starting to pull back. Now Lulu again down as much as 14% on the day. Where is this going to bottom out? Let's take a look at the chart. And if we go to the chart, I'm first going to be eyeing this level. We went over this morning, this area, and then double bottom. Remember, these are only swing trades. If we're going into a recession like I think, then these stocks are all going to go a lot lower. Another big fan, this is a big one for me that I'm watching to be a buyer of for just a swing trade, is Alphabet. Alphabet, look at this drop on Alphabet from over $200, $207. Look at the drop today. But look, gap fill, double bottom, coming right into that level. That should be a bounce level, and I will be looking to pick this up with members of Smart Money Stocks and ETFs next week, probably at a break of 150. All right, again, now think about the drop on that thing. If we go to a measure tool and we look at this high end, so far it is down 26%. If it gets down into my range, you're going to be down about 27.5%. For me, that would be a play for about a 10% bounce, and again, an easy swing trade potentially there as well.
All right, so let's go over what he just, these companies that he just mentioned as well. So he first started off with Lulu. Lululemon had bad earnings today, and it was down about 10 to 15% on the day because the high-end consumers are starting to pull back on their purchases. That means that people that are making higher amounts of money are starting to pull back on the things that they are starting to buy. They are going to look for more bargains instead of just buying all of the expensive stuff that they don't really need in life. Okay, so that is just giving us a sentiment of what's going on within our consumers. Your consumers are the people who are typically driving the stock market and the stock prices because these businesses rely on the consumer to buy things from them. If the consumer is not strong, then stocks cannot continue to make great money and profit, which inevitably leads to stock prices continually to go down. Okay, so until our consumer gets back strong in the United States, then you can expect that the stock market will continue to go down as well. He also mentioned Google. He said that if Google comes down and it breaks the $150 level, then he's going to be looking for some long-term buys back to the upside for about a 10 to 20% gain. Okay, so for next week, you can look for Google to sell down to our support level, and if it breaks our support level of 150, you can be looking to buy it back up, put in an option call for Google stock to go back up, and then you can make money on the stock going up.
Well, all right. Bitcoin. Let's go over to the big board to test out Bitcoin here. Follow me over here. We have Bitcoin, right? Now, number one, I've been telling you for a long, long time that Bitcoin was in between resistance, right? Bear with me as I get my drawing tool up here. Okay, so we have resistance right here, right? And we even pierced it here and got rejected, touched it here, got rejected. And we saw then that if you look at this, it was starting to connect and we had these lows, okay? And it was coming to the head of the wedge pattern right in here. Well, lo and behold, we know which direction it's going. Big drop on Bitcoin. And one of the things I was talking to members about today in the crypto video that I did for just members Smart Money Crypto is that in general, it's very rare. We have our support line down here. You almost never see a scenario where you don't at least touch support. What does that mean? It means that at some point this has to come down and touch support, right? What's the level of support? 74. I've talked about this before. 74 to 72,000. 72,000. So again, in general, when you're hovering between support and resistance, it's almost unheard of to never touch the support. It tells you that the odds favor us moving into support, and that tells us in general this is probably the beginning of the move, where again, at some point we're headed down here to at least 74,000. So keep an eye out for that. Notice again, the stock market got crushed today. Bitcoin taking a beating too. There's a risk factor here, risk on, risk off. In this case, risk off with Bitcoin. Now, on the other side of that, we have gold, right? Gold is the opposite. Gold, again, is the safe haven, and sure enough, it was up again today. So if we take a look at the chart here, you can see, again, the chart right up into this trend line, and this is a great parallel. Look at the parallel. Now, again, I've been expecting a pullback on gold since right here. We got a 3-day and then a push up. I still think gold is going to pull back, and it might not be with the popular crowd, but then again, that usually means I'm right. I expect a pullback here. It's not a big pullback. I still think it's a bigger uptrend in gold, but I do expect further a downside on gold and a.
All right, so Gareth just gave you a great breakdown of the stock market, put you in the charts, let you see exactly where the stock prices could possibly go to, where are they looking at in the charts. He also broke down the two major indexes, which is SPY and QQQ, and he also went over Nvidia, AVGO, Google, Bitcoin, and gold. All right, so that is one of my favorite stock market channels to watch, because he always gives a great game and really breaks it down to where you can understand and learn it, and then once you learn it, you can actually practice it yourself. Okay, so that's ultimately what you need to be doing. Once you watch these videos and you watch it so much, you can understand exactly and look and see exactly where are they setting things up on the chart, and then you have the ability to go and fish on your own. That means you can go out and find these trades on your own, because you are learning, because you're watching live professionals do it every day. Okay, so that is how I've been getting better and better, just by watching other people do this consistently. And then once I see them do it consistently and I understand, okay, he does this, but okay, someone else also does something that's similar or has different things into it. That way I can bring all of those different perspectives together and have the best trading plan possible.